everybody, thank you. Everybody that's not talking, can you please mute yourself?
Leanne, I was going to talk more about the Cal HFA regular programs. So when you start on the Dream, you want me to stick to some of the things on the Dream or just go straight to Cal HFA?
So no, whatever you want to, whichever programs you
Okay.
want to talk
Okay.
about. So I'll just,
Okay.
after I finish my presentation, then that's when I'll announce you guys.
Okay.
All right, it's 11:01.
President Mel, let me spotlight you.
Do we have the audience in yet? We'll have 100
Yeah, they're
people.
in. There, we have
Good.
100
Good,
people
good.
now. So I'm gonna spot. What I'm going to do is, as you guys are talking, I'll spotlight you, take you in and out. So, President Mel, I'm gonna spotlight you first.
Well, good morning, everybody, and happy holidays to you all. Merry Christmas, happy Hanukkah, happy Kwanzaa. And we are so excited. The California Association of Black Real Estate Professionals collaborating with the California Association of Housing, I'm sorry, the California Housing Finance Agency. And the two of us are working together in a strength of diversity, trying to make sure that products get out so that folks who are people of color and others who want to buy a home can actually buy a home. So, with that, I'm going to ask our Secretary Renee Roque to open up with a devotional, inspirational prayer.
Thank you, President Mao. Father God, we just thank you for this time to be together. We thank you in the busyness of the holiday season that we can come before you. Because when we're before you, we receive wisdom, we receive discernment, we receive understanding that in our physical alone, we can be limited. So, Father God, we thank you for this place and space. We think that you have given us talents and abilities to help those who aren't seated at the table, that you would give us wisdom and insight. And for Black ownership, Lord, for ownership for those who have not had the opportunity or feel that they can't, that you give us wisdom to help them, to reach them, to speak to them, to turn, to break down the barriers, because we know who you are and you're about helping others. And you left the 99 to find the one. So, Lord, thank you for giving us strength and wisdom so we can help our ones, our ones and our ones and our ones to accomplish things that perhaps they thought they never could, or their families of origin said, you can't do this. But Lord, give us wisdom to find a way to help to change a life, to change a legacy, to move on for home ownership. In your name we pray. Amen. Jesus' name.
Amen. Thank you so much. Madam President-elect, is our illustrious Sean Farms in the house?
Yes, he is, and
All
I will
right.
spotlight him. There's Sean. There you are.
Okay, here.
We hear you and we see you. Can you hear me?
Okay, there we go. Yes, I can.
Outstanding. When you're ready, you may read the mission statement.
Okay, I'm pulling that up right now. Give me one moment.
Outstanding.
Okay, so we are here to empower Black real estate professionals and communities by increasing Black home ownership, developing leaders, closing wealth gaps, and advocating for equity in real estate, focusing on education, mentorship, and strategic action to build generational wealth and representation.
Yay.
Yay.
So let me just, for those of you who are new to our collaboration of Black real estate professionals, we are a diverse organization. Three of our missions this year has been to create great leaders. And if you'll take a look at the leadership team at the National Association of Realtors, at the California Association of Real Estate Brokers, and at the California Association of Realtors, you will see a number of us CABREP members that are actively involved in leadership. And the second piece is to help CABREP members grow their businesses. And we've had a number of workshops throughout the year to help our members have the tools that they can put in place to grow their respective businesses. And thirdly, diversity. Diversity is our strength. CABREP members, although primarily African Americans, we have Asians. We have the founder of the Asian Association of Realtors who are members of our association. We have members from CABREP, from NARAP who are members. We have members from a variety of folks who are all a part of who we are. And lastly, we are building and sustaining Black homeownership. We did that at the beginning of the year, working with the fire victims in Altadena. And we continue to do that all throughout the year. And with that, I'm turning this over to our leadership team, Madam Teresa Miller.
Thank you, President Mel. It is an honor to be a part of the team with everyone else. I am truly blessed to be with all of you amazing, knowledgeable, super fantastic, smart, brilliant people. It is my honor right now to introduce our speaker of the hour. I would be honored to introduce Leanne Walker. Ms. Leanne has worked at the California Housing Finance Agency since February of 2003. At CalHFA, Leanne has served in various positions within the agency, and her current role is a training and outreach specialist in the single family lending unit, where she works to promote the agency's program through training seminars with lenders, real estate professionals, home buyers, and the general public. So, without further ado, I would like to present to some, introduce to others, Leanne Walker, and she's going to take it away.
Thank you, Teresa. Let me go ahead and share my screen. So hopefully everyone can see my screen. So good morning, everyone. Thank you guys for taking time out of your day to listen in on our presentation. For those of you that are not familiar with CalHFA or it's been a while, we are a state agency. We were created back in 1975, so we're celebrating 50 years this year. And in our 50 years, we have helped over 230,000 low to moderate Californians be able to purchase a home. So that is our vision, to have more Californians living in homes they can afford. Our mission is investing in diverse communities so that they have a place to call home. And that's what our mission is. And we have helped over 230,000 people over our 50 years achieve that. Now, since we are a state agency, so we are a state of California agency, our programs are administered at no cost to taxpayers. Our regular programs, the exception is the Dream for All. That's a little bit different, but our regular programs that we have ongoing, we are actually a self-funded state agency. So for borrowers to get access to our programs, they have to go through one of our approved lenders. And I have some of those on today that I will introduce later. So I'm going to go over this very quickly since we have limited time. I don't want to take too much time, but I do want to first let you know about CalHFA's regular programs. So yeah, everybody's excited about the Dream for All. It's a great program, but that only comes around every so often. But I want everyone to realize that CalHFA has programs year round. So they're always available. We don't run out of money. So they can help a lot of people. So our main down payment program is our My Home program. It's going to cover the borrower's minimum down payment. So it gives 3 to 3.5%. So on an FHA loan, it will give 3.5%. So it covers that full 3.5% down payment that the borrower is required to come in with. On conventional, it will cover 3%. And then if you have any VA borrowers or any borrowers that are going to buy in a rural area using USDA, they can get 3% and they can choose to use it for their closing costs. So my home is very flexible to where it could be used for down payment and closing costs. It is a loan that has to be repaid when the borrower either sells the property, refinances, or in 30 years, whichever comes first. It has a low 1% simple interest, so interest is accruing, but payments are not required. So the lender does not have to calculate a payment into the borrower's debt ratio. Now, in addition to down payment, we have two additional programs that you can combine with our My Home to cover their closing costs. So our ZIP program will give 2 or 3% that can go toward closing costs. It's a loan as well, but it has zero interest. That's what ZIP stands for, zero interest program. And then our newest program that's only been out maybe about 4 or 5 months is our My Access program. And that one gives 2.5%, and it can be used for additional down payment or closing costs wherever the borrower needs it. And again, it has the same 1% simple interest rate as My Home. So you can put two of these together. So you can't put all three. So we provide the first mortgages as well. So you could do the first mortgage with just My Home. That's going to give you our lowest interest rate that we offer, and our rates are pretty competitive. Sometimes they're about the same, sometimes they can be lower than the market. So that's going to give the best option to do just My Home, and then the borrower come in with their own closing costs or work with their realtor or realtist to see if the seller will give a credit toward their closing costs. But if they don't have the money to cover their closing costs and the seller's not willing to give a credit, then that's when you can look at adding on either ZIP or My Access. It does increase the interest rate on the first when you need to add on the additional assistance, but sometimes it could be very beneficial for the borrower. We have a loan scenario calculator on our website to where you can run scenarios. So you can run all three of these scenarios and have them side by side to figure out which option is going to work best for your borrower. So you could run it with just doing My Home, and then you could run a second scenario with My Home and ZIP, and then a third scenario with My Home and My Access. And then that will help you determine which combination of programs are going to work best for the borrower. So we do have some minimum requirements to get our programs. So they have to get their approval from one of our approved lenders. So whether they're doing FHA, conventional, VA, or USDA, they still have to meet those standard guidelines. And then in addition to our guidelines that we have on top of that, because our goal is to help someone get into a home and keep them in the home. So we want to make sure they are mortgage ready. So that's one thing I like to stress to our realtors and realtists, that especially if they're on the seller side, to not be afraid to accept an offer that has CalHFA financing. A CalHFA borrower is just as qualified, probably even more qualified than a regular borrower that has their own down payment, because we are making sure that they meet all of these requirements. And you know they're qualified, so they're going to get the assistance. So we have a minimum credit score. So it's 640 for any of the government loans. So FHA, VA, and USDA, and then 680 for conventional. We do require that the borrower is a first-time homebuyer. Our definition of a first-time homebuyer is someone who hasn't owned their primary residence in the past 3 years. So it's not just someone who's never owned before. And we're a little bit more lenient than most programs on our first-time homebuyer requirement, because we say that they just can't have owned their primary residence in the last 3 years. So you could have someone that owns a property, maybe it's an investment property, they rent it out. Long as the lender can prove that they've been renting somewhere else for the last 3 years, we still consider them a first-time homebuyer. We also require that they go through homebuyer education, because again, we want to make sure these are educated homebuyers, that they understand the home buying process. So they have a couple options, and the lender will help them out with this when they apply with the lender. They can do online through a company called eHome, and we have a specific link on our website. or they can do in person or virtual through any NeighborWorks or any HUD approved 8-hour course. And we only require one borrower on the loan to receive the counseling because these do cost money and they charge per person. Now, if two people are applying together, they can both take it, but we just only require one so we could try to keep the cost down for the borrower. Sometimes you may be able to find some for free or low cost, but it just varies based on that agency. Once they complete this, they will get issued a certificate. It's good for 1 year. So that's why we recommend that the borrower take this homebuyer education as soon as possible. I always recommend as soon as the lender pre-approves them, they should be taking the homebuyer education course. Because they won't be able to close without that certificate. So you don't want your borrowers waiting until the last minute and now you're scrambling trying to figure out how you're going to close on time because they didn't complete the homebuyer education. We also require that they get a 1-year home warranty, where you guys know majority of the time the seller will pay for this. Again, it's not a guarantee, but majority of the time the seller will pay for this. So this is something that the lender will work closely with their real estate team to let them know when they're putting in an offer. Mark that box to see if the seller will pay for the 1-year home warranty. This kind of ties into the homebuyer education because with the homebuyer education, they're going to go through the home buying process. They also go through budgeting. So very important when they own a home that they budget, especially for first-time homebuyers, because they need to realize that they're renting right now, something breaks, they just call their landlord. But when they own, they now have to be prepared to get those items fixed. So that's why we have that 1-year home warranty requirement. So that way they are covered for that first year. They can get used to being a homeowner. After that, it's up to them if they want to renew it or not. And then we do waive this if they are buying new construction. So if they're buying a brand new property, we do waive the 1-year home warranty requirement. And then they have to be buying a single family 1-unit property. It has to be owner occupied. So we don't allow multi-unit. So they can't buy a duplex or 2-to-4 unit, but they can buy a condo or a townhome. We even allow if the property has an ADU. So as long as that appraisal comes back saying it's a 1-unit with 1 accessory unit, we are okay with that. Just as long as it's not saying it's 2 separate units. We also allow manufactured homes, but it has to be a true manufactured home, meaning that they own the land and the manufactured home is permanently affixed to the land. So it can't be like a mobile home in a park where they pay space rent. So it has to be permanently affixed just like a stick-built home, and they have to own the land. And it has to be owner occupied, meaning that they are buying this home to plan to live in it as their primary residence. Our last requirement is income. I know I have people listening from all over, so I'm trying to keep my time a little bit short. So we do have income limits, and it's based on the county that the borrower is purchasing in. So you can go on our website and get a list of all of the counties. And our income limits are actually pretty high to be a low to moderate program. So where most programs, low income is 80% of the AMI, moderate is usually about 100 to 120. We go to 150% of the AMI. So you can go on our website and get a list of those income limits. So those are our regular programs that we have available year round. So just know we don't run out of money for those programs because it's recycled funds. It's there to help someone. Then when they go to pay it back, it goes back into our pot of funds to help another family. So that's why we always have funding available. So if you have borrowers that are just not ready, don't worry. It's not like Dream for All where they have only a certain time to apply. Those programs are available year round. And My Home and Zip, we've had since 2010. So that just lets you know how we always have a program available. So out of the 50 years that CalHFA has been in business, I've been there almost 23 of those years. And we've always had a program. So sometimes programs come and go, they change, but we've always had a program, at least in the last 23 years that I've been there. So now I'm going to move on to Dream for All. So Dream for All is a little bit different than our regular programs because it doesn't come from our own funding. It comes from a Senate bill that got passed with the state budget. So this is a program that we have to wait every year to see if the governor's office is going to approve it in the budget. So this is, we get money, the money runs out, the program's gone until it's refunded. So we have to wait every year. So that's why I wanted to highlight our regular programs that are available year round. So if your borrower doesn't qualify for Dream for All or they don't get selected, at least you know that there are other programs that can help. So Dream for All, a few years ago was the first year that we did that. We got 300 million. It went in 11 days. So pretty crazy. We had no way of knowing that it was going to go that fast. It was first come, first serve. So last year was the second year. So we had to change things up because we wanted to be fair across the whole state. So we switched it to a lottery. Well, actually, they keep telling me not to call it a lottery. It's a randomized drawing, which is basically a lottery. They just don't like saying the lottery because people think of lottery and think, oh, they're winning free money. And it's not free money. They have to pay this back. But the process is like a lottery. So the reason why it's so popular because it gives 20%, up to 20% that they can use for their down payment. So this program is on conventional only. It's coming early next year. We don't have an exact date yet. We didn't get funding this year, but we are getting funding for next year. So we are basically the administrator for this program. So the state is the one giving us the money for this program, and they are the ones that set most of the guidelines. So some of the guidelines may make some people not qualify, but those are set by the state. So the highlights of the program, like I mentioned, it gives up to 20% for down payment. They can use up to 5% of that 20% toward closing costs. So this is where the lenders could run scenarios for the borrowers to figure out where they need it. So it's on a conventional loan. So if they choose to use that full 20% for down payment, it avoids the mortgage insurance. So that's already going to save them several $100s a month on that MI payment. And then in that case, they would cover their own closing costs or get the seller to help cover their closing costs. But if they needed help with their closing costs, they can split up some of this money and they can use up to 5% to go toward closing costs. So if their closing costs are 5%, they put 5% for closing costs, the remaining 15% for down payment. Now, in that case, they would still have mortgage insurance, but it would be a lot lower because they're still putting 15% down. And there's options to buy out the mortgage insurance and do a single premium on our program. So there's a lot of different ways that the lenders can work this program. So say their closing costs are only 3%. They could put 3% for closing costs, the remaining 17% for down payment. So they'll get the 20% or 150,000, whichever is less. So we do have a cap of 150,000. So that basically comes to around a 750,000 sales price. So if their sales price is more than 750,000, then that's when they'll be capped at the 150,000. But anything below that, they'll get the full 20%. So example, say they're buying for 500,000. 20% of 500,000 is 100,000. So they will get 100,000. They wouldn't get 150. So it's 20% of the sales price or appraised value or 150,000, whichever is less. Now this 20% is a loan. It's a second lien. It's silent. There are no monthly payments. There is no interest accruing on this, but it is a loan that does have to be repaid when they sell, refinance, or 30 years. Now, in addition to them paying back this 20% loan, they also have to share 20% of their appreciation. So this is one thing that we want to make sure the borrowers are aware of because it's different than our regular programs, that they have to understand that they do have to, it is a shared appreciation loan. So to give you an example how that works, say they're buying a home for 500,000. Say in 5 years, they decide they want to sell. They're now their home is worth 700,000. So that means their home appreciated 200,000. So they would just share 20% of that 200,000. which comes to 40,000. So it's not like they're giving up all of their appreciation, all of their equity. So they are sharing some of that. So we want to make sure our lenders are letting the borrowers know this. This is why we do require that the borrower take a second homebuyer education course that goes over how shared appreciation works. So they'll take the regular 8-hour course that I mentioned on our regular programs, plus they have to take the shared appreciation course. That one is on our website and it's free. And we also recommend that all of you take it. That way you can better understand how shared appreciation works and you can explain that to your borrowers. Because we want to make sure that they understand on all programs, they need to understand what they're getting into to make sure this is the best decision for them. We don't want them to wait all the way till it's time to apply and then say, oh, I didn't know I have to share some appreciation. I don't want to do this. So we want them to know up front. And that's one thing at CalHFA, we never hide anything. We want to tell the borrowers up front all of the guidelines so they can make the best decision for them. So this year it will be the drawing again. Again, we don't have dates yet. We just wanted to come out early so people can start getting prepared. And I'm going to show you on the next slide a list of documents that we're going to need that the borrower can start getting together now. We're telling our lenders they can start the process of pre-approving the borrowers to see if they are going to qualify and if this is the best program for them. So that way, once we announce the date, then they'll be ready to go. And we also wanted to come out early too. Like I mentioned, this is a conventional loan. And as you guys are aware, conventional financing is a little bit stricter than, say, FHA. So that way, if someone has any credit issues, they have some time to get those taken care of so that hopefully they will be ready by the time we announce that. And also, we wanted to get ahead of the rumors. Last year, it was so much misinformation out there about the program. Social media was on fire, and we could only do so much to try to shut all of that down. So we wanted to come out early before all the misinformation got out there to let everyone know, yes, it is coming back. We just don't have a date yet. So we are waiting on the go-ahead from the state to give us a date. So it could be January, February, March, April. So we just know the first part of 2026 is when it will come. We will send out an announcement letting everyone know once we have that actual date. Now, the eligibility is a little bit different than our regular programs. So all borrowers still have to be a first-time home buyer, like I mentioned on our regular programs. So they haven't owned their primary residence in the last 3 years. But for Dream for All, at least one borrower has to be what's called a first-generation home buyer. So this could disqualify a lot of people. So again, this is why we're coming out early so people can figure out if they are going to meet this guideline. So the definition of a first-generation home buyer means that the borrower has not owned anything in the last 7 years. So they can't be on title, on a mortgage, anything in the last 7 years. And their parents do not currently own a house right now. If their parents are deceased, their parents did not own a house at the time of their death. So this, like I said, could disqualify some borrowers, but only one borrower has to be first generation. So say you have two borrowers, say you have a husband and wife applying together. Say husband is a first-time home buyer, but his parents own, so he's not first generation, but his wife, who's a first-time home buyer, and also she is a first-generation home buyer, that will work because one of them is first generation. So not all borrowers have to be first generation, just only one. One borrower has to be a current California resident as well. And then the Dream for All income limits are lower than our regular programs. As I mentioned, our regular programs, we go to 150% of the AMI. Dream for All goes to 120% of the AMI. And all of those income limits are on our website. So here are the documents that we're going to need so the borrower can start getting this ready. So the first step, they're going to have to go to one of our approved lenders and get pre-approved. The lender's going to have to fill out our pre-approval letter. They're going to fill that out. They're going to give that to the borrower. the borrower is going to be the one that has to apply in the portal. So once we announce the date of when the portal is going to be open, it may only be open maybe about 3 weeks. They have to apply within that time period. So they're going to have to upload that pre-approval letter. They're going to need to upload these other documentations as well. So we need a government ID, so driver's license, passport, state issue ID, military ID. We just need to be able to prove the borrower is who they say they are. Also, this can go for proof of that they're a California resident. So this can kind of kill two birds with one stone. So say their driver's license has their current residence here in California, their current address. They can apply their driver's license. That can account for their government ID, and it can account proof that they are a California resident. Now, if the borrowers have spent any time in foster care, they are automatically first generation. So we would just need that documentation to prove that they did spend time in foster care, and then we automatically consider them first generation. So when they go into the application, when they upload these documents, they're also going to have to fill out this information. So we need information on both of their parents to determine if they are first generation. So we only need this for the borrowers that are first generation. So like the example I gave where two people are applying, only one's first generation, we only need the parents' information of that borrower that is stating they are first generation. So we need their parents' name, their date of birth, date of death, if that applies, and their current address or their last address at the time of their death. We do have an investigation company that will investigate to find out to make sure that these borrowers are first generation, that their parents do not own. As long as they fill out the information correctly, that is all we need. But if they don't have information on one of their parents, then they will have to provide proof of parent relationship. So birth certificate, adoption papers. So we're just telling everyone, get that ready. We know not everyone maybe has a copy of their birth certificate. So they might want to get that just in case if they don't have all their parents' information. This is one thing that kind of held it up last year, where a lot of people weren't putting in the correct information. And when the investigation was done, they needed more information, and then they would ask for a copy of their birth certificate. But if they have all the information, it's all correct, then we won't need them to provide a birth certificate. But if they are missing information, that's when we will require the birth certificate. So all of this information is on our website. So I recommend that you guys go to the website, so calhfa.ca.gov, sign up for e-news notification. So if you go to the kind of the right hand side on the top next to the search button, you will see a picture of an envelope. You want to click on that, fill that out. And then that way you will be notified as soon as we announce anything, not just Dream for All, but any of our programs. That way you'll be the first to know. Especially, you're probably going to start seeing a lot of information on social media that may not be accurate. Always go to our website. It's going to always have the most accurate information, most up-to-date information. You can definitely reach out to us if you see something and you just want to confirm, okay, is this accurate? But we haven't announced a date yet. So if anyone's telling you there's a date, they're not being truthful, because we haven't announced a date yet. But as soon as we have the date, then we will announce that. So make sure you sign up for e-news. A lot of great information on our website. And I'll take questions at the end, but I want to just keep it moving and introduce our other panelists that we have. So as we know, homeownership is a crucial pathway to financial stability and long-term generational wealth. And that's one thing with the Dream for All. The state wanted to try to build that generational wealth. We are always looking to help underserved communities. We're helping all communities, but over the last few decades, we have noticed that all racial groups have seen homeownership rates increase except Black households. So that's why we created our Building Black Wealth Initiative, to increase Black homeownership and bridge that gap. So our programs are for everyone, and we're always, reaching out to all, communities, but we're just trying to help bridge that gap. So we have 5 partners that we have with our Building Black Wealth Initiative. So I'm going to introduce them and then let them talk a little bit about their areas that they serve and how CalHFA has helped their borrowers. So first, I'm going to introduce Shonta Clark. She's with New American Funding. Shonta has been doing CalHFA loans for a long time, probably almost as long as I've been at CalHFA. She's a great partner of us, so I'll turn it over to you, Shonta.
Okay. Hi, everyone. Good afternoon. I'm Shonta Clark, New American Funding Senior Loan Officer. I'm also on the Building Black Wealth website with CalHFA. I've done a few of the Dream programs where we're very successful. We've featured a couple just last month, Thomas and Tiffany, and we featured them in the City Pride magazine, talking about how they came from homeless to now they own a home. So the Dream for All is one of the best programs that I feel that's out there. Being in the city of LA and the county of LA, we need lots and lots of assistance, guys. So I'm just going to talk about this Cal HFA program that I usually do is conventional. I do the conventional on purpose because most of the buyers want to try to get rid of that mortgage insurance. So when I do the Cal HFA conventional loan, I sometimes do it with NHS, which is a Green Line grant program. So a buyer can put in 3% of their money down and still get a $35,000 grant with the Cal HFA program. Cal FA, Cal HFA also has where the buyer can go debt ratio up to 50% if their FICO score is 700. So a lot of my buyers in my community have student loans, and that kind of stops them from making their debt ratio to be 45 to 50. So if it makes it 50, then this Cal HFA is a program that can help them. I've also used it once again with the Green Line grant, but there's other grants within the city and the county of Los Angeles that I've used the Cal HFA with. Also Riverside and San Bernardino. Those are the areas I cover. Also with Cal HFA, they don't mind if it's a grant where it's free and clear, and after 3 years that other loan is forgiven, but they still have the second loan, which is a My Home program. That is not a forgiven loan. But keep in mind, this is layering in order to help our buyers in our community qualify. One of the biggest things that I liked about Cal HFA is I had a particular house where it didn't appraise for the value that we thought it would. So, of course, with Cal HFA, you can use that 3% gap, right, in order to help your buyers still purchase that house. So these are just some of the great points of using this particular program. I tell people I do the 8-hour home buyer class in person, West Angeles on Crenshaw, and we talk about this program because the communities that I'm in, we don't have that 3%. And with Cal HFA, you can still use the My Home with the zip, and that causes buyers to not have to put in a lot of money because they're barely making it, right? We can pay rent all day long. For some reason, people just don't have that money for that down payment. So this is a great program, guys. And I'm saying that to realtors that are out there. If you haven't used this program, please think about us. Use this program. Once you have one great experience with it, you'll never turn back and say, that's the program. And then if you're out there, keep in mind you are realtors for a reason. It's not just the Black community, it's every community that's out there. You're supposed to be their front person to help them. So if you can't figure out what to do to help, just say, let me call one of the lenders that I know that do these type of assistance to help people. I just have 2 other points. One, when you're using these programs, and people ask me all the time, do they have a higher rate? Not always. With Cal HFA, I notice there on the website, they sometimes have a lower rate than what I have. So then ask about buying down the rate even lower than that in order to help buyers. So these are just some of the pointers you need to know about using this program. So the Dream for All is coming, and I know some people didn't know, but the purchase prices that I was working with, 750, and then now I notice on the bulletin today, and I don't know if the whole panel knew this, it just came out as of January 1st, the high balance loan limits now it's exceeding for 832,750. 832,750. That is a nice size loan. And for you to do this with assistance, that's big in our communities. Okay. And that's about it I wanted to mention. And
Thank you,
Leanne.
Shonta. And so the next person, it will be Brenda Robinson. She's also with New American Funding, and she works closely with Shonta, and then she's been doing our loans for a long time as well. So I'll turn it over to you, Brenda.
Thank you. Good morning. I'm Brenda Robinson with New American Funding, and I have been doing CalHFA loans for many, many years. It is a very excellent program, very fair. They've put a lot of thought into these programs. And I just want to share just some of the information that Leanne spoke about. A lot of times, agents are reluctant to use down payment programs because they may have a 45-day escrow, but it's going to take 60 days or 90 days. This is not the case with CalHFA. We have, and the other panelists can attest to it too, we have been able to close these loans in less than the 30 days required. A lot of times we are up looking, saying, we're ready to close, and the agent is saying, well, our close date, our escrow is telling us the close date is a little further out. So they've really put some thought into this. And so that's one of the main benefits, is that we can close. Shonta in my office has closed in less than, I think, 19 days on an escrow with down payment assistance. Okay. So take all that into account. Also, and when I say they've put a lot of thought into this program, they are giving loans with a 640 FICO score. We can get an FHA loan with a 640, or if a conventional, if they're under 80% of AMI, they can go as low as 660. And then they have other avenues where you can go to a 50.0 debt ratio. If you have a 700, not a 720, just a 700. So there's so many benefits. And for years, they were doing, when they're looking at their single family residence, it includes ADUs. Now ADUs are very popular, but 20 years ago, it was single family and it had an auxiliary dwelling unit. It was okay with them. So I'm telling you, they put a lot of thought into coming up with programs to assist us and assist our clients. And they do manufactured loans, VA pricing, USDA pricing. There's just this is an excellent program. And I encourage everyone to get with a CalHFA lender. Go on the website. They are transparent. Everything is on the website. To the turn times of getting that file back to the lender, and it's a wonderful program. So I thank you very much, Leanne. Thank you for sharing this information with us, and I just wish everyone's journey on home ownership to be a wonderful experience, and that's what you will get through the CalHFA program. Thank you.
Thank you so much, Brenda. We appreciate your partnership. So the next panelist I'm going to introduce is Tanisha Broadway. She's with Element Mortgage. So Tanisha has been doing our programs for a while as well. Great partner. So Tanisha, I'll pass it on over to you.
Thank you, Miss Leanne. Good morning, everyone. My name is Tanisha Broadway. I'm a senior loan officer with Element Mortgage and the past president of another association, the Sacramento Realtists, which is a minority trade organization that advocates for Black home ownership here in California. I've been originating loans for over 20 years. I've had the privilege of helping families across our region use the Dream for All program. My go-to is CalHFA programs. I love them. I'm a little partial to them. That it's a great program. I'll just say that. But when people ask me, the kind of impact that the Dream for All specifically had for the Sacramento market, that's the market that I'm in. Although I service, obviously, I'm here in California. The impact was real and measurable here in my city. So Sacramento is a government town with like big city prices. Okay. Our median home price has been living around like 500,000. So even like a modest home requires a six-figure down payment if you're trying to get 20%. So in my day to day, that's a barrier. It's not the monthly payment, it's coming up with that money. Buyers can often afford the payment, but what they can't do is like bridge that gap of $100,000, right? So we look at who actually lives here. We have one of the biggest populations of state workers in the entire state. Nearly 1 in 4 Californians are state employee workers. These are stable, hardworking, like pension-backed earners, CalPERS, CalSTRS. Some of you may be state workers on here, union-supported agencies, but they're just not sitting on $100,000 to $150,000, right, in liquid savings. It's tough to save money. But the Dream for All, it matched perfectly with this demographic. It allowed people who serve this state to finally live in the city that they serve. We also have to address that's real, the state of housing in Black America. So it's a SHEBA report. You guys can look that up, SHEBA report. It calls Black homeownership in a state of emergency. And Sacramento reflects that. Now, our region, overall homeownership rate hovers around 60%, but to African Americans, it's closer to about 34%. Okay, while white homeownership remains in like the mid 60s. Now, this is a 30-point gap right in our own backyard. So down payment assistance is not just a financial tool, it's an equity tool. So programs like the Dream for All, CalHFA, My Home, all those wonderful programs expand the access to families and communities who have historically been shut out of, these rising values. And here's something that's really important. So Sacramento, we showed up in 2 phases for the Dream for All. I think roughly about 2,200 families are statewide. Sacramento County alone received about 11% of the total program funds, even though we make up about 4% of the state's population. Now, that tells you 2 things. 1, our buyers were ready, okay? And 2, our real estate professionals were educated and they moved quickly. Now, on the practical side, one of the biggest misconceptions, as our colleague just mentioned, is I hear down payment assistance makes a purchase slower or harder. Incorrect. Absolutely not the case. If anything, the Dream for All or these CalHFA programs, they strengthen the offer. Why? Because those funds are verified. So there's no last minute question about where the money's coming from. The funds are guaranteed. So what really makes a difference is the team. Buyers need a loan officer who understands the programs and a real estate agent who can position the offer correctly. Now, when that team's aligned and they can educate, the Dream for All, down payment assistance, CalHFA, all those programs become the strongest, cleanest offer in the market. And in this market, we're in California, it's about being competitive. Yeah. So for me personally, education is the heart of everything that I do. I host an ongoing home buyer workshop called The Blueprint. In fact, I had one last night. I do these every single month. And because the biggest gap in our community is it's not the willingness, it's really access to knowledge. When people understand the process, the fear drops and then confidence rises. It's about putting a plan together, right? So maybe some of you are on here who are like, gosh, I'm just not quite there yet. Okay, well, let's get a plan together to get you in position for these programs. Okay, so the Dream for All, did it make an impact on my community? Absolutely, it did. It moved people from I'll never see that kind of down payment to like now I can actually move into a home in my market. It especially helps state workers, first generation buyers, communities of color who are priced out of neighborhoods, like I said, that they grew up in. So for anyone on here that wants to connect with me directly, I'm going to put a link in the chat. You can reach out to me, fill out a quick informational form. I want to connect with anyone who's looking to start their journey towards home ownership. And I appreciate the time this morning, you guys. Thank you.
Thank you, Tanisha. So next we have Jamal Bay with Guild Mortgage. He's also in the Sacramento area. And Jamal is one of our Building Black Wealth partners, and he's also on our preferred loan officer list as well. So I'll pass it on to you, Jamal.
Awesome. Good morning, everybody. Thank you so much, Leanne. Yes, I am in Sacramento, what I like to say the last bastion of cheap real estate anywhere in California near a metropolitan area. We do still have inventory that is in the 300, 400K range, which is perfect for our home buyers that are making less than $100,000. I do work primarily the Bay Area and some of the SoCal area. For me, competition is not as fierce as other markets. Some of my colleagues here on this panel in Los Angeles or in San Diego, our competition is not as fierce. We have right now 40 days average days on market, above 40 days right now. So a lot of what we're seeing in our market is seller concessions, price reductions, and a lot of help and incentive to get buyers into home ownership. So many of our clients right now are using the CalHFA My Home program. That's the program that's going to cover the minimum down payment requirement. And then using the help from a motivated seller with seller concessions, with seller credit to further reduce that out-of-pocket cost. And so understanding that, if a seller is willing to give $10,000, let's say in seller credit, that's free money that could help that buyer keep more money in their pocket. So we're doing a lot of layering those kind of scenarios together. We're also utilizing CalHFA's first mortgage alone. I think Shonta mentioned that the interest rates on CalHFA tend to be lower than the national average. So oftentimes, if, for example, we have a low-income borrower that's utilizing the conventional loan, CalHFA's rates are often much more competitive than what we could offer as far as the national average goes. The PMI can sometimes be reduced as well, the private mortgage insurance on those My Home programs for our low-income buyers as well. So there's a lot of incentives when utilizing the CalHFA program that we may not necessarily be able to get in the exact same way on a standard conventional or, for example, a standard FHA loan. As far as Dream for All goes, we've been very successful with helping several families find the dream of home ownership through this, fantastic program. My realtor partners here love it when we have a Dream for All pre-approval because we know that those loans have a high percentage of closing, right? Those funds have been verified and the state is willing to contribute up to $150,000. So it's an excellent, excellent program. And again, can compete with most other buyers on an offer. One of my most memorable experiences helping a client was back in 2023 when the Dream for All first launched, as Leanne mentioned, before it was within the lottery format and it was first come, first serve. We were able to secure funds for a family, wonderful family, literally within hours of the funds running out. And so, that those clients were so grateful and so happy. And today they are homeowners with equity and love the program. In fact, we just closed a client last Thursday utilizing the Dream for All. She applied for the Dream for All back in 2024 and didn't get the initial round of funding in the initial lottery, but she patiently waited on the waiting list for over a year. And fortunately, her number was called and she was successful in closing on her home just last Thursday. So one of the biggest things I can stress, and as Tanisha mentioned, the education is so important. I've heard really horror stories from clients who have been working with other real estate professionals and getting misinformation and underinformed about the program. And often it's that lack of understanding that could prevent our potential buyer from getting their offer accepted. So for us at the Bay team here at Gill Mortgage, we're typically closing these loans within 21 days and sometimes even sooner. Here we have an ability to underwrite our loans up front before our buyers even go out and start shopping. So that really helps us to reduce our close time significantly. So if we can do anywhere between a 17-day to a 21-day close on a CalHFA program, we're certainly very competitive in our marketplace. So if you're a real estate agent on this call, our CalHFA buyers are literally just as qualified, and our loans are closing just the same as any other loan program. So if there's any questions or any concerns about these products, you can always reach out to any one of us, and we'd be happy to answer any questions that you have. As if you're a first-time home buyer on this call and listening to this, I know how daunting it can seem to be to purchase a home. And sometimes it seems impossible. Maybe it feels like the goalpost is constantly moving, and there's a lot of information and a lot of moving parts. But I can assure you that it is very doable to be a homeowner here in California, and it is important to align yourself with the right team, both on the lending side and the real estate side, who are familiar with this program. But don't be afraid to ask questions and learn as much as you can, but at also the same time, trust the process and follow those steps as they're laid out. I'm a huge proponent of home ownership and a huge proponent of the CalHFA programs, as they are a clear pathway for home buyers to become homeowners. And so, I'm always here to advocate for our community to be able to purchase homes. And that's all I have.
Thank you so much, Jamal. Last but not least, we have Aaron Hultin. He is from Fairway Independent Mortgage Corporation, and we're a little bit jealous of him right now. He's in lovely San Diego, where it's nice and warm. I'm freezing here in Sacramento. But Aaron is also one of our Building Black Wealth partners, and he's also on our preferred loan officer list as well. So take it away, Aaron.
Okay. So I'm going to mirror what lots of people said on here, so I'm just not going to say it. What I'm going to say is the biggest thing is what you're doing now. It's gathering the information. It's asking the questions. I've done this for about 3 decades, and the biggest block is you yourselves. If you don't pick up the phone and ask the questions, most people will self-disqualify. We have guidelines that we have to meet. We have all this other stuff, but it's really it's irrelevant to you. Pick up the phone, ask the question. You've got a ton of people here that are willing to work for you. If you don't meet the credit requirements right now, pick up the phone anyway. We can get you ready. We all have different avenues where we can get you in the position so you are ready in the future, even if you're not ready today. I've successfully utilized CalHFA now for the entire 3 decades that I've been in this business. My specialty is layering, so I do a whole lot of combining CalHFA with other programs. We've got our Riverside County programs. We've got San Diego County programs. I closed a dream for all from the last round last week, where we were able to use 20% from Dream for All attached to 20% from Riverside County. I've got past CalHFA clients where we worked through credit issues for 2, 3, 4 years before they got to a position where they were ready, but they did it. At the end of the day, they did it. The one that's kind of my favorite success story is we worked on the guy's credit for 3 years, and we've now done 3 investment properties for him. We've done several of his kids' properties, because he got in the door, and the avenues that opens once you get in the door and get that first property is huge. So, realistically, don't let the minutia weigh you down. Just pick up the phone. Pick up the phone, make the call to somebody. We're all professionals. We can all figure out how to make it work for you, even if you're not ready today.
Thank you, Aaron. So those are our 5 Building Black Wealth partners. As you can see, they do a lot of CalHFA. They're great partners of ours. They know how to do our program, and we appreciate their partnership. So I will pass it on, I think, to Mel, or is that going to be the next person?
Yes, there you go. And thank you all. This was really a luxury that I've enjoyed thoroughly. All of you people of color, you're beautiful, and you are helping empower our community. So yay, yay, yay. Thank you all for what you're doing. And on behalf of the California Association of Black Real Estate Professionals, our leadership team, whom are all a part of this, we thank you, we thank you, we thank you. So let me just give you a couple of hard facts. The reality is that Black homeownership is down. It's down. If you look at it on the national level, Black homeownership is about 44%. At the state level in California, it's 36%. But in my county, Los Angeles County, it's down to 32%. And so we need to take advantage of these tools. Let me tell you something, folks. We are in a down market, and you need all the tools you can get to help empower your clients to be on the upside of a down market. This will pad your pockets, but more importantly, it will build wealth, Black wealth in the communities that we serve. And so I thank you all for being a part of this, Leanne Walker. You are a rock star. And
Thank you.
thank you for assembling this team of professionals, very articulate, know their stuff, but they are more importantly passionate about empowering our communities to have homeownership, which is the surest path to generational wealth. I'm going to turn it back over to our illustrious president-elect, soon to be president, Teresa Miller. You want to take the questions and answer, have some of the panelists answer those questions for us. You're on mute. There you
There we
go.
go. All right, I'm going to bring the panel back up. We have about 16 questions. I do believe we can get through all of them. So if you just give me 1 second, I will add them and take away some of us. There we go. Hold on. All righty, let's get everyone back up here. This has been, while I'm doing this, I just want to share, this has been simply amazing. You guys have a wealth of knowledge and brilliance and passion and love for what it is that you do. And I'm just totally honored just to be in your presence. So thank you so very, very, very much. All right, hold on. Let me see. I got 1, 2, 3, 4. I'm missing Brenda. Where is Brenda?
She's there. She's right there.
There's Brenda. Add spotlight. Okay, I got everybody. Okay, I'm gonna pop me out and we're going to ask the questions. Okay, I got everybody. So we have 15 questions. I believe we can get through all of them. So the first question is, are the DACA recipients eligible? And I'll just let you guys answer in whatever manner you see fit. Unmute yourself and you may, whoever wants to take the first question.
You have to be a U.S. citizen or permanent resident for the CalHFA programs.
For this
So
program.
we don't have our own citizenship requirements. We follow FHA and Fannie Mae. So FHA has changed their guidelines. So DACA is no longer available on FHA, but unconventional, I believe it's still available. So we just follow FHA and Fannie Mae guidelines. So I believe still on Fannie Mae still allows DACA. So you guys could correct me. I'm not the lender, so you guys will know, but we just follow whatever FHA, Fannie Mae, VA, USDA guidelines are.
Okay. Our second question says, how does the SB 57 bill that passed this year affect the program, how it's going to be administered? Will this bill allocate 10% of the funds to descendants of formerly enslaved? Now, B, if you would like to tell us what SB 57 is, or panelists, do you guys know what the SB 57 bill is? Or Renee, can you look that up and tell us what it is? And so while she's doing that, I'm gonna go to the next question. The next question says, can we, okay, I answered that question. The next question is 15-day close of escrow on CalHFA. They said it's absolutely no issue. So whoever said that, I believe Shonta said that,
Yep.
you were
New
perfect.
American Funding.
Absolutely perfect.
I can do that as well, Element Mortgage.
Hey.
Outstanding. So another question is, this person says, what I'm told is CalHFA's compensation on the down payment assistance is lower than using their own funds. And if so, why?
So
That's a
we allow the lender to charge up to 3%. So every lender is going to charge different. So our programs, the guidelines, the rates are the same across the board. So no matter which lender a borrower goes to, they're going to get the same rate. But that's the only thing that can differ is the what the lender is charging. So each lender determines what they are charging on our loans, but we have put a max of 3% that the
And
Okay.
lender can
if
charge.
I may add, a lot of times you guys may work with a lender or even a realtor that scoff at the program because they may their margins may be too tight for them to do this program, and so that's going to cut into their commission. So they'll talk you out of using the program or shy against it because it affects their bottom line. So if you're working with someone and they're talking against the program, it's probably because it affects their bottom line. So everyone that's on this call, clearly we're in this business. We do this program because we want to help our community, regardless of the impact that it has on our commissions. So just make sure that you know that that's like an important piece for those of you who have other loan officers that aren't any of us, and maybe they haven't brought this information to you. That might be a reason to think about.
Outstanding, outstanding.
Can I add also?
Absolutely.
Shonta had mentioned we have the Green Line grant, so we're able to add additional financing. The Green Line grant, it's a grant of 35,000. You live in the property for 3 years, it's totally forgiven. So there's other ways, and I'm sure the other panelists have programs that they can add to it as well.
Outstanding.
And
Thank
also,
you.
if a realtor or lender is talking to you about their commission, like that's a whole nother problem.
Exactly.
Okay, so let's just put that out there. All right.
Exactly.
So, okay, I'm done.
All right. The next question says, is there an upper age disadvantage to applying for single folks? I guess, in other words, someone who may be a little more seasoned in age. Is there any disadvantages for them?
I'm going to say no. And I just want to say this real quick. Very last loan that I closed, he was 90 years old. He was a first time home buyer. I just closed this loan last week, by the way. It was 10 days clear to close, by the way. 90-year-old pastor. He was in tears. He thanked God. It only was the Lord, first of all. But so again, so to answer that question, it does not matter where somebody is in their age. No discrimination. So
Yeah.
Outstanding, outstanding. Okay, our next question says, if you were in foster care and you have documentation, do you still need to include the biological parent's information? Also, what if biological parent's information is unknown?
So that if they did serve time in foster care and they have that documentation, then they don't need to provide parents' information. We automatically consider them first generation.
Outstanding. That was a great question. That's good to know. Our next question says, can you please speak to the student loan debt? I achieved a loan forgiveness, but my partner still has a lot of student loan debt.
So the best solution for student loan debt, given that the dream is a conventional product, is if they can get that moved into an income-based payment. Because if they can get it moved into an income-based payment, even if that number is zero, that's the number that we're going to have to use to qualify them. If it's in deferment, in forbearance, and has no payment, then on a conventional, we're going to default to that 1%. So they're way better off if they can get it moved into an income-based repayment.
Okay, thank you. That's great to know. Okay, this one is just a little more clarification. Can you explain again what qualifies as a first generation home buyer for the Dream for All program?
Yes. So first generation means you, the borrower, has not owned any property, have not had any mortgage interest in any property in the last 7 years, and your parents do not currently own a house right now. If your parents are deceased, they did not own a property at the time of their death. And it's for both parents. So if one parent doesn't own, but the other parent owns, then you're not first generation. So it's for both parents. So the borrower has not owned in the last 7 years, and their parents do not own now or did not own at the time of their death.
Outstanding, outstanding. Our next question says, will a consolidation loan help? They did not say any more on that. I guess maybe consolidating their debt, would that help them qualify their debt to income ratio? Maybe that's the route they were trying to take.
Maybe they're talking about student loan consolidation.
Could be,
Sometimes there's a payment, so yeah, maybe that's what they're talking about. So
could
yes,
be.
you can consolidate the student loans, but usually when you have an income-driven payment, that helps if you're doing any program, especially when you're right now, they're being hit with 1% or 1.5%, but with Cal FHA, we're only doing conventional through the DU, right? Well, excuse me. We're doing FHA conventional and must have a DU approval. So with that, as long as the student loans are consolidated, maybe that's what they're asking about
Okay,
for that.
great. Thank you. Thank you, Shonda. Here's a great question. This question says, do you have any programs to assist new construction? If you already own the land outright and you already own a home. So I guess they want to do new construction.
So
Well,
that would be a question for the lenders. CalHFA, that would be construction loan. We don't do construction loans. Now they can buy new construction where a builder's building the home and they're buying it brand new, but we don't do loans where they own the land and they're going to build a house. So that would be a question for the lenders to see if they offer those type of loans.
I absolutely offer those
yeah,
types of loans,
I do
all
too.
loans, outside the box loans, new construction, buy the land, build on it, one loan, DSCR if you're looking to buy a home without using your own credit, using the rental from the property. I mean, there's so many options out there. So, I mean, this call is specifically, we're talking about down payment assistance, but for those of you on here who maybe are not first time home buyers or you're looking for an investment type of loan or just other types of options, I'm sure myself and the rest of the loan officers on here are equipped to handle all different types of loans. So yes, we can
Yes,
do that.
I want to add to that. I'm doing a Compton project right now. We've closed 4, and we closed Cal HFA on 2 of them. So that's a whole construction. They're building phases, and we have closed with Cal HFA on those type of projects. But
I do
like my
commercial
panelists said,
financing as well. I just want to throw that out
okay.
there.
Oh, okay, okay.
Yeah, but just I
Outstanding.
want to make sure you realize that we don't do construction loans. So what Shanta's mentioning, that was like a builder building new
hmm
construction. But if they own the land and they are looking to build a house on that land they already own, they can't do CalHFA for that.
Uh-huh. That's good to know. Our next question, we have just a couple more, I believe. Next question, is there a maturity date for the homeowner to sell or refinance? Or can they do it whenever they want, even if it takes 10 years or more?
So for our loans, it's 30 years. So they just have to pay back the assistance when they either sell, refinance, or in 30 years, whichever comes first. So they could never sell, never refinance, stay in the home 30 years, then it's due and payable in 30 years. And then on Dream for All, um, I'm thinking that the guideline's going to stay the same. But for the previous rounds, we have allowed the borrower to refinance once without having to pay it back. But on our regular programs, My Home, My Access, and Zip, if they refinance at any time, they have to pay it back at that time. But they can refinance at any time,
Hmm.
but it's just the assistance has to be paid back.
Hmm. Thank you. Thank you. My next question, the person wants to know, could you share the difference between a NACA program and CalHFA?
That's a loaded question.
Very loaded.
Yeah.
I'll say one thing.
I know. Do your best. Do
It's
your
two
best.
totally different companies. Just
We
put
can
it
say
that way.
something.
There's that.
And
Okay, I'll say this. If you want to buy soon, right? If your timeline is like, I'm going to buy a house within the next, CalHFA. But if you're like, you know what, I don't mind taking a couple years, NACA, and I'll stop there.
That is a very true statement.
And I'll say too, I meet a lot of people who tell me that they have a CalHFA loan,
Mhm,
and there I can count on one hand how many
mhm,
I've crossed in the last 20 years that
mhm,
have a NACA loan.
mhm.
So
That's true.
I heard they have a good system of gathering the information, but I've told too it takes a
It's a
long time.
process. It's
And
definitely a process.
this is a real point too, and I don't mind saying this, and NACA knows this, there's no secret. If we pre-approve you for one number using CalHFA, that number with NACA is going to be lower because they work off of a lower debt to income ratio requirement than we do over here. That's just how they work out. They're very conservative, nothing wrong with that, but that's just their process. So if you're looking to
Mhm.
maximize your pre-approval numbers, right? You live in
Yeah.
California, it's expensive. I said that in my presentation. Then NACA may not be the best direction for you because of their conservative guidelines. So
Mhm. Very good. Great answers, you guys. Great answers. Here's another question. This one says, my mother's been deceased for 7 years now, and I never knew my biological father. Would that qualify me for being a first generation buyer?
So the first question would be, did her mother own at the time that she passed away? If she did
Mhm.
own, then she wouldn't be first generation. Now, if she didn't own a property when she passed away and you don't have any information on your birth father, then that's when you would have to provide a birth certificate because you're filling out this application to the best of your knowledge. So that's why we would require in that case, you would have to provide um, a birth certificate. So that way we can research to see if your birth father has owned a property.
Outstanding. Outstanding. The next question says, is the dream for all 20% appreciation? What happens if the owner passes and it's willed to a relative? Does the loan follow the home or the person?
So it just depends on how that's set up. Hopefully that person had a living trust. That's a whole nother class. But if the house gets transferred to someone, just say via living trust, we won't require them to pay it back at that time. They would just continue with the ownership. But if they did decide they wanted to sell it, then it would be due and payable at that time.
Okay, outstanding. All right, let me see. Let me see. Someone wants to know how likely of being approved for a Dream for All program. 30%, 50%? You don't know.
It varies because we don't know how many people. So last year we had over 18,000 people apply for maybe about 2,200 loans. So that's why it is kind of like winning the lottery. But we do a wait list, and so the people that didn't think they were going to get it, they end up getting pulled from the wait list. So I just tell borrowers, and I tell our lenders to tell borrowers, look at all of your options that you have. Look at our regular programs. Look
Mhm,
at the city and county programs, and see what works. Maybe those programs can work for you now. You find a home now that you like, go
mhm,
for it.
mhm,
Because there's no guarantee that you're going to get selected for Dream for All. So
mhm,
just look at all of your options. Whoever you go with, have them give you several options. That way you can see what works for you. And then maybe Dream for All is the one that's going to work the best for you. And then you're worth waiting, but at least you know that you have to wait and there's not a guarantee that you're going to get selected. Unlike if you used our My Home, that's as long as you meet the guidelines, the
mhm.
funds are always there. So it just really depends on, that particular borrower, but they would just need to work with their lender, figure out what is
Mhm.
the best option for them.
Outstanding. Robert, I see your hand.
Yes, this is an excellent presentation, and I want to know if it's possible I can get everybody, everybody's information, phone numbers, emails, any of that possible?
We have it all.
You guys have
Yes.
okay.
Yes. And we will be recording, or the recording will be posted on our CABREP website, cabrep.org. And we will be posting all of our amazing lenders and speakers, their information also on our website as affiliate members. I mean, you guys are just, you knocked it out of the park. Let me see if I can find. Oh, here's one. This one says, what if your birth certificate is from another country? It's not a regular birth certificate from the US. How do they submit it to prove first generation home buyer?
So that's fine if it's from a different country. The only time you need to provide that birth certificate if you don't have your parents' information. So if they know their parents' information, they put it in correctly, then we won't need a birth certificate. So especially for someone who maybe if they were born outside of the country, maybe they don't have access to their birth certificate. So we just only need the birth certificate if they're missing any parent information.
Outstanding, outstanding. All right, I would like to do, we have 9 minutes left. And the questions that are here, what we'll do is we will submit them to our amazing panelists. We'll get the answers back and we'll post them on our website. But I want to give you guys a round robin and then I will send it back to Mel, President Mel, to allow you guys to say any last thing that you would like to say, that you meant to say, that one thing. I'm going to start with Leanne.
I just want to thank everyone for joining us today. All of you guys, all of our panelists, thank you so much. We appreciate your partnership and thank you for getting, being here today, listening for the information to get information about CalHFA and how CalHFA helps all homeowners be able to achieve that dream of homeownership. So thank you all.
Thank you. Aaron?
Yeah, just you're doing the work coming in here. Like that's the first step. You've done it. So just continue that trend and pick up the phone and make that next step.
Outstanding. Shonta?
Hi. I just want to say this was a great presentation today from all my colleagues, which I didn't know where they're located. Now I do, but I stick with doing 8-hour home buyer classes in case you realtors and realtists have buyers that want to come in person to meet up with me. I'm doing one at West Angeles CDC. This is our last 8-hour home buyer class of the year on Crenshaw. But we at New American Funding also do multiple programs. But CalHFA is our number one for our Inglewood office. And we do grants also for the city of Inglewood that can go with the CalHFA program. We're trying our best to get more buyers in the Inglewood area to apply to get this grant with the CalHFA first time homebuyer program. That's it.
Outstanding. Tanisha?
I'm going to say, don't let fear be the reason why you don't move forward with home ownership. A lot of times we get stuck in the unknown and you're fearful of jumping forward. Home ownership isn't just about keys, it's about stability, pride, and it's about generational impact. So remember that. We're here to be a resource. And I'm grateful and thankful and blessed for the Lord to have given me this ability to do what I do. And I appreciate the opportunity to be on here today. And for all of you that are present, thank you for joining. And if anyone wants to reach out to me, I'm here.
Outstanding. Brenda?
Thank you so much for this opportunity today. And I recommend when everyone leaves this call, go on the CalHFA website, sign up for e-news so you are informed the same time I am informed when the California Dream for All program is announced. There's a lot of information. All of this is on their website, but pick up the phone and like Aaron was saying, and talk to a lender. Tell them the situation. We are a team. We're building a team, and that team is going to get you through. So I wish everyone much success through their journey of home ownership. But this is a wonderful program, and now is the opportunity. Take advantage of it. Thank you.
Standing. And Jamal.
I'm looking at the questions, and you guys have some fantastic questions. The one thing I can say is do not pre qualify yourself, do not count yourself out of the race, okay? We are California, CalHFA preferred loan officers, yes, but we are mortgage advisors first, right? And our job is to find the best fit for you. And so maybe not all the time it's not CalHFA. Maybe not all the time it's NACA, for example. There's a place for NACA for some folks out there too, right? But that is part of our job. And so I see all of the questions, and I realize that with the information that you've just been given, it is a lot. But it is our job to understand all of the fine points, all of the nuances, and be able to set you up for success. Okay, so again, like Tanisha said, do not let fear stand in your way. Do not let information overload stand in your way. Come see one of us. Let us walk you through the steps, and let's get you on the right track.
Outstanding. President Mel.
Well, thank you all. Thank you all. I really appreciate it. And Leanne, for you assembling such an illustrious, highly professional, knowledgeable team of mortgage lenders. Shonta, we will see you in LA. Tanisha, I missed you when I was at the CABREP meeting in Sacramento a month or so ago. And Austin, Aaron, I'll try to connect with you next time I go to San Diego, bro. So, because I got people down there. Jamal, thank you again for your help and for educating us about the affordability factor. And Brenda, you rock. Thank you again for what you do. And on behalf of our board of directors, the California Association of Black Real Estate Professionals, our executive team, our president-elect, Teresa Miller, our secretary, Renee Roque, our treasurer, Yolanda Washington, our immediate past president, Robert L. Johnson, one of our founding members, Dolores Golden, who is a past president, and Evelyn Arnold, who's also a founding member, all on our executive team, and to our board of directors, Denise Mathis, Sean Farms, who's here in the house, Linda Clinton, Daryl Woods, Murphy Richardson, Tia Honeycutt, Melrose Ford, and Ruth Hales. So you guys are the ones that are responsible for putting all this together. And my hat goes off to Yolanda and Teresa. You guys were able to get my friend Leanne tied up, and she tied up the rest of y'all. So we really appreciate y'all for what you're doing. And on behalf of the California Association of Black Real Estate Professionals, our tenets this year is creating great leaders, helping our members grow their businesses, realizing that diversity is our strength, and promoting Black homeownership and Black wealth sustainability. And with that, our incoming president has some great news that she would like to share about what's on the agenda for 2026. Go ahead, you're on, Madam President.
Thank you, President Mel. Am I muted? Can you hear me?
I hear you.
Okay, perfect. In the length
Put
of
your face up
time.
there too. We want to see you.
Oh, you want to see me? Okay, let
Of
me find my
course.
face. Let me find my face. Hold on. I'm gonna find my face. There we go.
Yay.
There we go. I think you can see me now.
Yes, thank
All
you.
right, perfect. In the length of space of time and energy, I want to share this one thing, which is super important. I would like for you to save the date if you are planning to attend any of the California Association of Realtors business meetings. They are held 3 times a year. Our first meeting for 2026 is going to be in Monterey. And when we are in Monterey, that is our time to get together. And we usually have an amazing mixer and networking time. This time, it's going to be the installation of our CABREP 2026 officers and directors. We would be honored for you to save the date and show up. The way that you're going to find out all of our information is I want you to scan that QR code. I want you to become a member if you are not a member already. Then you will find out everything that we're doing throughout the year. We've got some amazing seminars that are planned. We are planning to redo this one again in January. Beautiful Leanne said we could do it. She'd bring her team back. And it's just great information that we need a do-over. We need a second. We need a repaint. So please continue to keep your eye out for those things. Save the date for our installation and our mixer. We will also share our calendar for the entire year. We will get that to you because now that you've joined and registered, we're family now. We're going to share everything that we can share with you because we want to promote and see you lift and climb and grow in your business personally and professionally. And with that, I'm going to turn it back over to President Mel.
Well, I think we have as they say in the business, we have a wrap. Y'all kicked it out the park. You threw touchdowns. I don't know what all the acronyms I can use and all the analogies I can use, but outstanding. I wish you all the best. May you have a safe holiday season starting with Hanukkah, Christmas, Kwanzaa, and Happy New Year. Blessings to you all. Thank you all for being a part of the California Association of Black Real Estate Professionals, collaborating with our dear friends at the California Association, California Housing Finance Agency. I want to make you an association, Leanne.
And let's not forget that tomorrow is President Mel's birthday.
Yes.
Thank you. Thank
Happy
you.
birthday to you.
Thank you.
Happy birthday to you. That's the extent of my singing. That's it. That's all I got.
Thank you all. Blessings to you all. We will see you at the top. God bless you all.
Bye.
Thank you. Bye bye,
Blessings, everyone.
everyone.
Bye. Blessings.